Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 133, recorded here on September 15th, 2024. This podcast is for entertainment only and is not investing advice. Please do your own homework. All right, well, we'll start with the market update outlook, get into the weekly top Bitcoin news, talk about our featured post on Bitcoin Fortress Substack, and then wrap up, of course, as always, with top boosts on Fountain. The S&P 500 on Friday rebounded from its worst week of the year to post its best week of the year. It was also the first time since June 2022 that the benchmark index fell at least 4% in one week and then rallied more than 4% a week the next. Everything's fine. Last week's sell-off had been driven by concerns over economic growth after a slew of soft data on the labor market and historical September weakness. This week, the narrative reversed after traders received inflation data that cemented expectations of a Federal Reserve interest rate cut next Wednesday. The only question now is, how much will this be the size of the cut? This is it, folks. This is how we do investing these days. What will the Fed do? Wall Street this week also saw the second U.S. presidential debate between Vice President Kamala Harris and Republican nominee and former President Donald Trump. The candidates sparred over various topics, and the consensus later was that Harris won the debate. I don't know. The whole thing was just a joke. For the week, the S&P 500 surged 4%, while the Nasdaq Composite jumped 6%. The blue chip Dow climbed 2.6%. Read a preview. Oh, and the preview for next week is here. All eyes on the Federal Reserve next week. The Fed's Monetary Policy Committee is widely expected to cut interest rates for the first time since 2020, making this central bank meeting one of the most pivotal ones ever in recent history. Though a cut is the consensus, there has been a debate over whether the size of the rate cut should be 25 or 50 basis points. Aside from the Fed, the Bank of England and the Bank of Japan will also be issuing policy decisions. In terms of economic data next week, market participants will receive updates on U.S. retail sales and industrial production for August. The earnings calendar will be fairly light, though there are some major names on tap, including Betty Crocker and Cheerios parent General Mills and parcel delivery giant and global economic bellwether FedEx. Moving into the Bitcoin news, we'll start with No BS Bitcoin, block 861441, important news of the week. They finally got this out before I recorded, so we can go through all of the news updates here. OpenSats now supports Mike Dilger and Jason Donenfeld. Mike Dilger is the lead developer of Gossip, a secure, privacy-focused Nostr client using Rust. Gossip is a reference for the Outbox model, a design enabling more scalable Nostr message distribution. Jason Donenfeld is the creator of WireGuard, a secure VPN protocol and primary author of the Linux kernel's RNG. WireGuard secures node and data center communications, while the Linux RNG generates cryptographic keys essential for Bitcoin security. 10101.finance is shutting down. We've done a lot of reflecting, and we know what we have built is not receiving the traction and growth we wanted it to have. We also know it won't scale easily to the masses either due to technical limitations, said 10101 founder Philip Honish. Nayuta Wallet is shutting down too. The project will be shutting down its Nayuta LSP node in 3 months, and Lightning Network transfers will no longer work in the Nayuta wallet. Users are recommended to close existing channels and transfer their funds to other Lightning wallets. Bitcoin Data launched developer program for women in Africa. The program aims to enhance women's development and coding skills. It provides hands-on training, educational sessions, and a collaborative environment to help women engage in Africa's tech landscape. Kracken halts support for the Lightning Network for German customers. The exchange recently moved to BA-FIN regulated banking provider DLT Finance reports the rage. We'll go into a little bit more detail on that one later. ARK21 Shares ETF diversifies custodians with Anchorage Digital and BitGo. With this move, the ETF issuer aims to enhance safety and security from online threats, hacking, and cyber attacks while increasing diversification in the digital asset investment landscape. Monochrome Bitcoin ETF to implement proof of reserves. Monochrome Asset Management partnered with Hoseki to offer daily proof of reserves for its Bitcoin holdings. This integration also allows direct Bitcoin applications and redemptions, ensuring privacy and transparency. Metaplanet buys more Bitcoin. The publicly listed Japanese company said it had purchased 38.6 Bitcoin for 300 million yen, or $2.2 million. It now holds 398.8 Bitcoin, reports Bitcoin Magazine, whose parent company, UTXO Management, is also an investor in Metaplanet. Japan's largest electricity provider explores Bitcoin mining. Agile Energy X Inc., a subsidiary of Tokyo Electric Power Company, is exploring Bitcoin mining using renewable energy sources. What we are doing has few parallels in Japan. Success of our framework would prompt more green energy to be introduced, said Kenji Tateiwa, president of the company. CleanSpark to acquire 7 Bitcoin mining facilities in Tennessee, totaling 85 megawatts of power capacity, as well as associated properties for cash payments of $27.5 million. The company expects to close the transaction by September 25th and install 5 exahash per second of newly arrived Antminer S21 Pros across the sites. Antpool F2 Pool to support fractal Bitcoin merge mining. 2 of the top 5 Bitcoin mining pools now support merge mining with fractal Bitcoin, a sidechain launched on Monday. Fractal Bitcoin uses cadence mining, allowing Bitcoin miners to merge mine every third block, while the other 2 blocks are for fractal Bitcoin miners only. The sidechain supports BRC20 tokens and ordinals, aiming to offload these transactions from the Bitcoin network, writes the Miner Mag. Meanwhile, at Dima Ledba identified important security issues in the official Fractal Bitcoin Docker release. Venezuelan army seizes 35 Bitcoin miners. Strategic Operational Commander Domingo Hernandez Larez stated that the operation lacked the required permits and licenses for mining in Venezuela. The company mandates registration for mining, cryptocurrency exchanges, and digital asset services. India leads the world in cryptocurrency adoption. According to the latest adoption report by blockchain surveillance firm Chainalysis, India is followed by Nigeria and Indonesia. Overall, the report finds increasing adoption in the region of Central and South Asia and Oceania. And they have a list here. I guess number 1 is India, number 2 is Nigeria, number 3 is Indonesia, number 4 is the United States, number 5 Vietnam, 6 Ukraine, 7 Russia, 8 Philippines, 9 Pakistan, and coming in at number 10, Brazil. The total number of active Bitcoin ATMs decreased by 0.9% in August. Canada saw the most activity this month with 53 new ATMs, a 1.8% increase, while New Zealand added 39 ATMs, or a 31.7% increase. The United States had the most removals, with 343 ATMs removed, a 1.1% decrease, due to Digital Mint closing operations in August, per Coin ATM Radar report. BitAccess and Genesis Coin were the most active manufacturers. No legal crypto ATM operators in UK. The UK's financial regulator charged Olumide Osunkoya, a 45-year-old in London, for running a £2.6 million or $3.4 million network of unregistered Bitcoin ATMs. The Financial Conduct Authority alleges he operated these ATMs processing millions between December 29, 2021 and September 8, 2023 without its approval. There are no legal crypto ATM operators in the UK, added the regulator. Wow, that's not very good, is it? Bill to classify Bitcoin as personal property introduced in UK. The UK Parliament introduced the Property, Digital Assets, etc. bill to legally recognize Bitcoin, cryptocurrency, and other digital assets as personal property. Once enacted, it will help determine ownership in legal disputes and protect crypto owners from scams and fraud. New version of EU chat control bill leaked. In the latest variation of the bill, providers would be free to choose to use AI to classify unknown images and text as suspicious, but must search and report known illegal content, even if it breaks end-to-end encryption. EU governments will decide on the proposal by 23rd September, and EU interior ministers will endorse it on 10 October, reports Patrick Breyer. So a little more authoritarianism, please. Android apps are blocking sideloading and forcing Google Play versions instead. Ars Technica reports that sideloaders of apps via Tesco, Beyblade X, and ChatGPT have reported "Get this app from Play" prompts which cannot be worked around. Google is not playing nicely. At least 280 Android apps use OCR to steal cryptocurrency. Disguised as official apps from banks, government services, and utilities, they scan infected phones for text messages, contacts, and stored images, sending this data to remote servers. Distributed via malicious sites and phishing messages, none of these apps were found on Google Play. FBI reports a 45% surge in losses tied to cryptocurrency fraud in 2023. The Internet Crime Compliance Center received over 69,000 cryptocurrency-related complaints totaling $5.6 billion in losses. These amount to 10% of financial fraud complaints and about half of the total losses, reports the blog. Swan warns of another phishing campaign. We just became aware that this fake phishing email was sent to some Swan clients. Do not follow any instructions in this fake email, said the company, and they include a copy in there. I always ignore that stuff anyway. I used to buy Bitcoin from Swan, but I don't anymore. I just buy it from Strike or Unchained, and I don't know. You just have to watch. There's so many hackers out there. You just have to, unless you initiated it, to just ignore the email. Fed hits United Texas Bank with cease and desist order for serving virtual currency customers. Uh-oh, the Fed's at it again. The Fed issued a cease and desist order to United Texas Bank last Wednesday for, quote, significant deficiencies in adhering to anti-money laundering laws, especially in dealing with cryptocurrency customers. The company has previously collaborated with firms like the Stellar Foundation and Circles USDC. This is the second time in a month the Federal Reserve has acted against a crypto-adjacent bank. In August, the Fed found, quote, significant deficiencies in Customers Bancorp Inc.'s risk management and anti-money laundering procedures. Standard Chartered launches Bitcoin custody service in the UAE. The service, licensed by the Dubai Financial Services Authority within the Dubai International Financial Center, follows a May 2023 Memorandum of Understanding. The bank chose the UAE for its balanced digital asset adoption and financial regulation. WorldCoin account sales investigation in Singapore. Bad actors illegally selling WorldCoin accounts and tokens are under investigation in Singapore for potential money laundering and terrorism financing. On August 7th, Singapore police warned against selling or giving away WorldCoin accounts or tokens to prevent their use in criminal activities. Yeah, that's the one where they scan your eyeball. Shitcoin. Stay away from it. Indonesian crypto exchange Indodax goes offline following a $22 million hack. Multiple blockchain investigation firms alerted to an attack on an exchange's hot wallets, which was confirmed by the firm. Over 25 Bitcoin was stolen, along with many more altcoins. Co-founder of the exchange, William Sutanto, stated that Indodax will cover all user losses from the attack. Well, isn't that nice? How about don't leave your coins on the exchange? Have we not learned this? eToro will pay $1.5 million to settle SEC charges for operating an unregistered broker and clearing agency. Moving forward, U.S. customers can only trade Bitcoin, Bitcoin Cash, and Ether on its platform. Banxa enables Lightning in partnership with Zero Hash. Banxa users can now make fiat to crypto on-ramp and off-ramp transactions via the Lightning Network. Good to see. Bitcoin Oasis conference postponed to 2025 due to unforeseen circumstances. Bitcoin Oasis 2.1 postponed to 2025. We're committed to delivering an exceptional event and appreciate your understanding. Stay tuned for updates. We can't wait to welcome you next year, said the event organizers. And finally, BitBlock Boom 2025 to take place on April 3rd to 6th, 2025. Event tickets are available at https://bitblockboom.com. There's a link in the article. And as always, I'll put copies of all this in the show notes so you can read it for yourself. Next up, this is the Hodler's Digest for September 8th to 14th from Cointelegraph. So we'll go through that and see what's interesting here. The United States Federal Bureau of Investigation Internet Crime Complaint Center has released its cryptocurrency fraud report for 2023. There's a little more detail on what we talked about earlier. Americans lost $5.6 billion due to cryptocurrency fraud that year, up 45% from 2022, it said. Crypto-related complaints represented 10% of the total received, but almost 50% of the total lost that year, the FBI said. The report found that of the 69,000 crypto-related complaints the FBI received in 2023, people over 60 were most often victimized, accounting for almost 1.6 billion of the losses. Almost 71% of the crypto fraud was related to investment schemes, and about 10% involved call center fraud and government impersonation scams. The FBI received complaints from over 200 countries, but the vast majority of complaints and losses were from the United States. Many of the losses were the result of confidence schemes. The FBI had one main piece of advice to avoid this type of scam. There is only one thing these scammers typically will not do. They will not meet with you in real life. If an investment opportunity comes from someone who you have never met in person, be extremely cautious of the advice. Well, finally, something I agree with, although I would also say stay humble, stack sats, and just ignore the scammers, especially if they're talking shitcoins, but even Bitcoin. Just buy your Bitcoin from an exchange that you trust, put it in cold storage and forget about it, and don't leave it on the exchange. Cryptocurrencies like Bitcoin will likely play a role in the coming United States presidential election, as increasing numbers of U.S. crypto investors are concerned about the candidate's approach to regulating the industry. The vast majority of crypto owners in the U.S. plan to consider the crypto regulation stance of U.S. presidential candidates in the upcoming election in November, according to a new report by Winklevoss twins-founded crypto exchange Gemini. Released on September 10th, Gemini's latest Global State of Crypto report featured a survey of 6,000 adults representing a random sample of the consumer populations in the US, the United Kingdom, France, Singapore, and Turkey. The survey was conducted online from May 23rd to June 28th, 2024. According to Gemini's findings, as many as 73% of US respondents who currently own crypto said that a candidate's stance on crypto would have some impact on their vote. Additionally, another 37% of respondents indicated that a presidential candidate's position on crypto would have a significant impact on their vote. And of course, as we know now, after the last update, the United States is number 4 in crypto adoption in the world. So I guess it matters. Lawyers representing former Alameda Research CEO Caroline Ellison recommend that she be sentenced to time served after pleading guilty to 7 felony counts related to cryptocurrency exchange FTX's downfall. In a September 10th filing in the United States District Court for the Southern District of New York, Ellison's legal team submitted letters from friends, colleagues, and family members recommending she serve a light sentence. The attorneys recommended that the former Alameda CEO, based on the probation department's pre-sentence report terms, be sentenced to time served with 3 years supervised release at her September 24th hearing. The PSR grounds this foundation in Caroline's extraordinary cooperation with the government, her otherwise unblemished record, and the numerous testimonials of Caroline's honesty and ethical behavior both before she started working at Alameda and since she left Alameda, the filing said. Caroline poses no risk of recidivism and presents no threat to public safety. It would therefore promote respect for the law to grant leniency and recognition of Caroline's early disclosure of the crimes, her unmitigated acceptance of responsibility for them, and most importantly, her extensive cooperation with the government. Ellison's lawyers added, without any way diminishing the very serious crimes here, we respectfully submit that the policy goals and interests of justice do not require sending Caroline to prison and accordingly request a non-custodial sentence. I don't know. I don't know how I feel about that. Vitalik Buterin, no, not going to go over that. North Korean hackers, including the infamous Lazarus Group, may begin targeting larger financial entities, including United States-based Bitcoin exchange-traded funds. Uh-oh. The Lazarus Group is associated with some of the most notorious hacks in the cryptocurrency space, including the biggest hack in decentralized finance, the $625 million Ronin bridge hack. Hackers could start shifting their attention to the U.S. Bitcoin ETFs due to the sizable potential payout, according to Michael Pearl, Vice President of GTM Strategy at on-chain security company Cybers. Pearl told Cointelegraph in an exclusive interview, only recently the FBI has issued a warning that North Korean hackers are going to try to infiltrate and steal money from ETFs. So all those ETFs are storing the base Bitcoin somewhere, and you can be certain that somebody is already planning and thinking of how they're going to steal it. Yes, they are. And let's see. Here's some FUD of the week here. Nubank, one of Latin America's largest crypto banks and backed by Warren Buffett's Berkshire Hathaway, announced on September 10th the immediate suspension of trading for Nucoin, its native cryptocurrency. Sounds like a shitcoin to me. The token's price has dropped over 97% over the last year. Nubank announced the creation of the Nucoin token on the Polygon blockchain on October 19, 2022, almost 2 years after the announcement. The bank closed its trading. The bank has given customers who have at least 10 reals in new coins the option to convert them to Bitcoin or stablecoin USDC by December 9th. Well, I guess that's nice, but they've lost most of their value. As Cointelegraph Brazil reported, if a user does not proceed with the conversion, the cryptocurrencies will be kept for accumulation and future benefit from the rewards program. To protect you and all participants from potential volatility in the market value of new coins due to potential reactions to this update, we've chosen to suspend your trading immediately, Nubank said in an email to customers, according to the media report. Kracken, a decentralized cryptocurrency exchange, has responded to the United States Securities and Exchange Commission's claim that it violated federal securities laws. The SEC alleged that the multiple digital assets the crypto exchange offers qualify as unregistered securities. In the legal filing response, Kraken firmly denied the allegations, maintaining that the assets in question do not meet the legal definition of securities under U.S. law. The exchange's defense rests strongly on the assertion that digital assets, including Cardano, Algorand, Cosmos, and others traded on Kraken, are not investment contracts. Ah, yes, but they are shitcoins. Popular stock trading platform eToro is ceasing trading for nearly all crypto assets after reaching a settlement with the U.S. Securities and Exchange Commission. I think we heard about this earlier. eToro was charged with operating an unregistered brokerage and clearing agency related to its crypto trading platform. The trading platform has agreed to pay $1.5 million to settle the charges related to its unregistered brokerage and clearing agency operations, the SEC announced on September 12th. As part of the settlement, eToro has agreed to make only a limited set of crypto assets available for trading in the U.S. and to cease violating applicable federal securities laws. In line with the settlement, eToro's U.S. customers will only be able to trade Bitcoin, Bitcoin Cash, and Ether tokens, allowing customers to sell their other crypto assets for up to 180 days starting September 12th. Next up from Bitcoin.com news, this was posted yesterday. Swift unveils plan to integrate digital assets and currencies into global payment network. Global payment network Swift announced on Wednesday a plan to facilitate the movement of digital assets and currencies on its platform. The initiative aims to allow members to access and transact with regulated digital currencies, building on prior experiments conducted with its community. This marks a significant step in integrating digital currencies into Swift's existing infrastructure. The announcement states, "We're paving the way towards real-world solutions that will enable our members to access and transact with regulated digital assets and currencies on the Swift network." Interest in digital assets and currencies continues to grow, with the last 2 years bringing greater clarity on the potential value of these developments to the industry, Swift explained, citing projections by Standard Chartered and SynPulse estimating tokenized asset markets could reach $30 trillion by 2034. Institutional investors, however, face challenges due to fragmented platforms and regulatory complexities. Swift warned of digital islands, where disparate systems lead to higher risks and costs, the firm noted. On the digital currency side, while the latest Atlantic Council figures show that over 130 countries and currency unions are currently exploring a central bank digital currency, significant work is still needed to integrate these emerging currencies into the wider global economy. Swift's blockchain experiments demonstrated the ability to transfer tokenized value across different networks. The firm described, "Our successful blockchain interoperability experiments showed how Swift's infrastructure can facilitate the transfer of tokenized value across public and private blockchains. Our Phase 1 and Phase 2 CDBC sandbox projects, carried out with leading central and commercial banks from across Europe, Asia, and North America, demonstrated how we can interlink CBDCs on different networks and interlink multiple asset and cash networks," Swift further shared. Moving forward, Swift will continue testing multi-ledger transactions, including delivery versus payment and payment versus payment, with plans to integrate tokenized forms of money like CBDCs. "We're excited for the future of digital assets and currencies on our network and will continue to collaborate with our community to drive progress in this area," Swift concluded. Well, that all sounds really happy and nice, but here's the thing. Number one, they're supporting CBDCs, which are bad, bad, bad. And number two, even if they're transferring Bitcoin or other things on their network, it's censorable, because the Swift network can basically sanction you if you're a government and they don't like you, whatever, whatever, whatever. So if you opt into this, then you're basically subject to censorship. So not great. Next up is from Decrypt. This is a little bit more detail on the news piece that we talked about earlier with Kracken on losing access to Bitcoin Lightning Network. This was posted on September 13th. Top crypto exchange Kraken has removed the Lightning Network feature for customers in Germany, citing technical changes. Earlier on Friday, crypto news publication Protos reported that a support agent at Kraken had attributed the removal to regulatory issues, but a spokesperson for the San Francisco-based company told Decrypt that Kraken support incorrectly cited regulatory changes for the suspension of the service. The change of service for German clients wanting to use Lightning is the result of technical changes, Kraken said without further explanation. "While we always strive to provide the best and most innovative services to our clients, we unfortunately sometimes have to make tough decisions to ensure we can offer a reliable and secure platform for as many clients in Germany as possible," the company added. The Lightning Network is one of several second-layer applications for Bitcoin applications. It works to speed up transactions so the cryptocurrency can be used to make smaller purchases. Transactions are routed through side channels, so there is no need to use the main network, and are then settled in batches later. The idea is that people can use Bitcoin to make small payments for cheaper items at lower cost. Other major crypto exchanges also have Lightning integration. Coinbase, America's biggest digital asset exchange, made the service available back in April. The idea is that customers can choose the alternative network for Bitcoin transactions and save significantly. And by the way, this is really important And when there's a high fee environment and you want to move your Bitcoin off the exchange, it's a lot cheaper to use Lightning to do that. As Bitcoin transaction fees can rise when the network becomes busy, Lightning aims to solve that. It's almost like they predicted what I was going to say. Anyway, kind of suspicious what's happening over there. Know that the German government's not a fan, so it wouldn't be surprised if they basically told them, "Don't say that." Um, Next up, Crypto Potato. This is from September 14th. SEC crypto enforcement actions surged 3,000% to $4.7 billion in 2024. So a little bit more on that. The U.S. Securities and Exchange Commission has ramped up its enforcement actions against the cryptocurrency sector in 2024, imposing nearly $4.7 billion in fines. This figure represents a 3,018% increase from the $150.3 million in fines issued in 2023. According to a report from Social Capital Markets, 2024's figures are largely attributed to the SEC's $4.47 billion settlement with Terraform Labs and its former CEO Do Kwon in June, making it the largest enforcement action to date by the agency. This legal action addressed serious issues, including misleading investors and offering unregistered securities following the collapse of Terra USD and its associated ecosystem. The total fines for 2024, which stand at $4.68 billion, include various penalties such as forfeiture, disgorgement, civil penalties, settlement, and prejudgment interest. Although the regulator's crackdown dropped from 30 in 2023 to 11 in 2024, average fines soared to about $426 million, up from $14.71 million in 2022. This trend indicates a strategic shift by the SEC toward fewer but larger fines, with a focus on making high-impact enforcement actions that set precedents for the entire industry, the report notes. Other notable fines in 2024 include penalties against firms like GTV Media Group and fraudsters John and Tina Barksdale, each exceeding $100 million. Since 2013, the SEC has issued over $7.42 billion in fines against the cryptocurrency industry. Of this total, 63% has been in 2024 alone. In 2019, the $1.24 billion fine imposed on Telegram Group and TON Issuer Inc. for unregistered token sales led to a notable 2,000% increase in the average fine compared to previous years. Ripple Labs received a $125 million fine for selling XRP as an unregistered security, causing the average fine for that year to rise to $35.2 million. However, the SEC is yet to agree, as it can dispute this one. The enforcement actions in 2024 also emphasize accountability for both companies and their executives, with firm plus individual penalties totaling $5.08 billion across 63 actions. Most fines exceeded $1 billion, making up 46% of the total, largely due to the $4.68 billion penalty against Terraform Labs. Punishments ranging between $1 million and $10 million are also common, accounting for 30%, and often involve smaller firms. There were also judgments falling under $1 million, highlighting ongoing scrutiny of minor projects. So if all this sounds like familiar to the legacy banking system, you're right. Basically, the way the legacy banking system works is they break the law all the time. They never face any criminal penalties. They just pay fines and they continue to operate. And the fines just become a cost of doing business. And similarly, the shitcoiners and fraudsters in the crypto space have adopted the same business model. Just full speed ahead and pay your fines and move on. No shitcoins. Next up, from Bitcoinist.com. This was posted yesterday. Bitcoin nears critical address threshold with bull run in sight. According to data from CoinMarketCap, Bitcoin appears to have finally found some stability in September, recording a price gain of nearly 13% in the last week. Interestingly, crypto analyst Barak Kazmechi has unveiled a certain condition behind this price rise, which could prove vital in initiating a market bull run. On Friday, Kazmechi shared via an X post detailing how the number of new Bitcoin addresses per day is a strong indicator of price movement. With respect to recent price gain, the analyst noted that new Bitcoin addresses have been on the rise, reaching 330,000, with a potential of touching the critical threshold of 350,000. Kazmechi explains the pivotal status of 350,000, stating that whenever the number of new Bitcoin addresses moves above this level, it indicates that bulls are gaining market influence and the price trajectory is upward. Alternatively, when new Bitcoin addresses fall below this threshold, it could represent a price correction or the beginning of a bearish season. For the latter case, the crypto analyst explained that a straight decline in new Bitcoin addresses to below 250,000 would result in a full-fledged bearish market, as previously seen on 3 occasions in the last 6 years, i.e. from 19,000 to 6,000 in 2018, from 64,000 to 30,000 in 2021, and from a record 74,000 to 49,000 in 2024. However, the recent rise in new Bitcoin addresses, which has dipped below 200,000 to above 300,000, has been largely impressive. Kazmechi postulates that if this metric reaches above 350,000, especially following the U.S. Federal Reserve meeting next week, Bitcoin investors could be in for a, quote, delicious period. The spot Bitcoin ETF market is one of the most exciting crypto developments in 2024. It is widely believed that these exchange-traded products will drive institutional demand for Bitcoin in the long run. Doesn't seem like they're there yet. From a lot of the research I've read, it's mostly small-time investors that are buying into that. There are a few hedge funds that own it, but not in any significant size. While such notions may be true, Kazmechi has expressed concerns about these ETFs hampering network growth. It is because a single ETF could hold Bitcoin for several investors who would have created individual network addresses if they invested in Bitcoin directly. Therefore, there's a need for constant new waves of retail investors, even in the advent of ETF-driven price growth. At the time of writing, Bitcoin trades at 60,395, reflecting a price gain of 4.31% in the last day. Alternatively, the asset's daily trading volume is down by 9.35% and valued at $30.5 billion. So, new addresses on the rise. Good to see. Next up, from Cointelegraph, this was posted on September 13th. MicroStrategy adds 18,300 Bitcoin, now holds 14.14 billion worth of Bitcoin. MicroStrategy, a publicly traded business intelligence and software company, has announced that it acquired approximately 18,300 Bitcoin between August 6th and September 12th. The company's Form 8K to the United States Securities and Exchange Commission states that the purchase, worth $1.11 billion, was made at an average price of $60,408 per Bitcoin, including expenses and fees. The firm, led by CEO Michael Saylor, has continued to expand its holdings of Bitcoin over the past 4 years after making its first purchase on August 11, 2020. The company's recent acquisition increased its Bitcoin holdings to approximately 244,800 Bitcoin, currently worth around $14.14 billion. The average purchase price for MicroStrategy's Bitcoin purchases since August 2020 is $38,585 per Bitcoin, with a cumulative investment of around $9.45 billion. MicroStrategy's aggressive approach has sparked both debate and praise from financial analysts over the years, but the firm has not slowed its acquisition of Bitcoin. The funds used to purchase this latest 18,300 Bitcoin were raised through selling its company shares, enabled through a sales agreement with several financial institutions on August 1st. According to the SEC filing, MicroStrategy has raised approximately $1.11 billion by September 12th from selling an aggregate of 8,048,449 shares under the sales agreement. The capital raised from the sale of these over 8 million shares was directly allocated to expanding the firm's Bitcoin holdings and increasing the size of its portfolio. On August 10th, MicroStrategy held 226,500 Bitcoin worth $13.77 billion in reserves, acquired at an average price of $37,000 per Bitcoin. At the time, Bitcoin's price was approximately $60,500, And MicroStrategy had $5.39 billion in unrealized profits. Since August 2020, it has effectively outperformed the S&P 500 index. The value of MicroStrategy stock rose by around 1,000% since August 2020, equating to over 16.25 times the returns of the SPX over the same period. And finally, an article from Bitcoin Magazine, opinion piece, called Bitcoin Vaults and the Future of Bitcoin Custody, which I thought would be interesting to explore. This was posted on September 11th, 2024. Bitcoin, the original cryptocurrency, has come a long way from its informal past, from an experimental digital currency that occupied cypherpunk niches on the internet. It has grown to a $1 trillion market cap asset valued at over $66,900 per coin as of this writing. Well, that was a while ago. While investing in Bitcoin is still considered a wild ride, the asset is quickly maturing. Financial institutions are closing in and creating hybrid vehicles to invest in cryptocurrency. The ecosystem reached a new milestone with the advent of Bitcoin ETFs, making people realize the immensity of Bitcoin's potential in traditional markets and spurring new demand. As more people and institutions invest in Bitcoin, Bitcoin vaults become more crucial. Here we examine the features and importance of Bitcoin vaults and how they contribute to ensuring a reliable infrastructure that promotes sustained value and investability. We explore their role in professionalized and institutional custody. Secure custodians are vital to protecting digital assets from theft and loss. This article also tracks the fast advancing technology of Bitcoin vaults and how it relates to future developments in the custody space. What are Bitcoin vaults and how do they work? Bitcoin vaults are offline digital asset storage solutions offering enhanced protection against online threats. This protection is created through multiple security layers. As the Bitcoin investment sphere grows, new products are being created. Bitcoin vaults are a critical component of these new financial products. While hot wallets and exchange accounts offer easy transaction access, they are vulnerable to hacks. Bitcoin vaults are fortified digital safes. They protect your Bitcoin by taking it offline and shielding it from the constant openness to online attacks. Their multiple layers of security include withdrawal delays, multi-signature or multi-sig authentication, and cold storage solutions. One highly secure approach to Bitcoin or crypto vaults is called air gapping. Air-gapped storage offers robust protection against malware attacks, phishing scams, and unauthorized access. Many Bitcoin vaults integrate advanced encryption techniques. They typically require multiple authorizations for transactions to proceed. Advanced encryption and the need for layered authorization steps bolster security posture. As a Bitcoin investor, ensuring that your coins are kept in air-gapped and layered security vaults protects your investment and helps you hold it long term. Bitcoin vaults are a component of Bitcoin custody solutions. Bitcoin custody is the entire process of holding and securing Bitcoin. Because Bitcoin is a digital asset, it requires unique storage solutions to protect it from theft and loss. As Bitcoin's value rises, so does the interest from cyber criminals and hackers. Therefore, secure custody solutions are essential for protecting these digital assets. The following advanced technologies combine to create the security behind Bitcoin vaults. Understanding them helps you understand, evaluate, and appreciate their robustness. Cold storage is a security method that keeps Bitcoin offline or away from internet-connected devices. Being offline reduces the risk of cyber attacks. Bitcoin cold storage is often used with multi-sig technology to provide maximum security. Multi-signature or multi-sig technology requires multiple private keys to authorize a Bitcoin transaction. This method implies that even as one key is compromised, the Bitcoin in the wallet cannot be transferred. The transaction still requires the other keys to be approved. Multi-sig technology enhances security by distributing ownership and control over Bitcoin. It makes it very challenging for a single entity to access or steal the assets. Hardware security modules are tamper-resistant and hardened devices that secure cryptographic processes. They generate, protect, and manage keys used for data encryption and decryption, as well as digital certificates and signatures. These specialized devices, in other words, are designed to protect and manage your digital keys. They provide a secure environment for cryptographic key generation, storage, and usage, ensuring that the private keys are never exposed to potential threats. HSMs are often used in Bitcoin vaults to enhance the security of the stored assets. HSMs are recommended for those with significant Bitcoin holdings. They are also ideal for businesses handling Bitcoin and other crypto. While integration can be complex and require continued maintenance, the security benefits far outweigh the cost for those with high value holdings. Furthermore, HSMS are tested, validated, and certified to the highest standards. They enable organizations to meet and exceed emerging and established regulatory requirements for cybersecurity. As Bitcoin and its related financial products gain popularity, so does the need for reliable custody. Companies that offer this service are called Bitcoin or crypto custodians and are a critical component of the digital asset industry. These companies or platforms offer secure Bitcoin and crypto storage and provide services such as private key management, online security solutions, and transaction processing. Crypto custodians are gaining prominence as the cryptocurrency market grows. They are essential in ensuring that assets are stored and managed securely. Moreover, they protect investors' funds by providing layers of security beyond what public wallets or exchanges offer. However, it must be noted that exchanges, trading desks, and investment platforms run their own custody solutions. In addition, some exchanges are also the most noted custody providers. Examples of top custody providers, most of which offer investment access, include Swan Bitcoin, BitGo, Coinbase Custody, Anchorage, Gemini Custody, Bakkt, and Bitcoin Suisse. Several companies are competing in the crypto custody market. If you're a regular Bitcoin trader or investor, you might be curious about how to choose what works for you. Platforms should enable users to buy and store Bitcoin easily, while popular exchanges like Binance and Kracken offer a wide range of services, including retail buying and selling of crypto. They have downsides. They may not provide the best storage options for your crypto, and they may be more vulnerable and open to various hacks. Long-term Bitcoin investors usually shun day trading and prefer to buy and hold strategy. Swan Bitcoin is a low-fee platform specializing in Bitcoin-specific investments. It offers a full suite of Bitcoin financial services, including Swan Vault, simplifying Bitcoin storage for users. If you're curious how it compares to large global exchanges, check out the Kracken review on Swan Bitcoin's site. There's a link here in the article. The best Bitcoin vaults give you complete control over your coins with user-friendly and straightforward features for setup, deposits, and withdrawals. They use the most reliable hardware to provide users with the most robust security. An example of such hardware is the Blockstream Jade signing device, a hardware wallet used by Swan Bitcoin to ensure Bitcoin owners full access to keys offline. You need signing devices that store 2 private keys to unlock a Swan vault. Swan manages a third key called the cloud key, which is recommended for use as a second key to prevent bringing both hardware signing devices to the same location. Bitcoin vaults must have sound recovery strategies for Bitcoin theft or loss, as 72-hour holds for cloud key withdrawals. Moreover, these vaults need to offer comprehensive support services, including secure storage of spare keys to assist you in moving funds and customer support manned by trained specialists. Bitcoin vaults are becoming increasingly important as more people and institutions invest in Bitcoin, as digital assets gain legitimacy through legalized financial products. Security custody solutions become increasingly vital to protect them from theft and loss. By leveraging advanced technologies such as multi-sig authentication, cold storage, and hardware security modules, Bitcoin vaults provide a robust security solution for digital assets. In addition, multi-layered features ensure secure storage of private keys and means of recovery in case keys are lost or stolen. Bitcoin vaults are not just meant to store Bitcoin securely, they form the bedrock of the asset's long-term viability as an investment vehicle. It is not enough to leave the knowledge to technical experts or institutions. By understanding the importance of secure Bitcoin storage and the advancements in custody solutions, investors can make better informed decisions about safeguarding their digital assets. And my commentary on this is just that, yes, you need to study your security setup, and you need to make sure that it's appropriate for your level of risk tolerance and also probably your amount of Bitcoin that you have. If you don't have a lot of Bitcoin, having one cold storage wallet is probably fine. Once you get to a larger amount of Bitcoin, it probably makes sense to have multi-sig enabled, which you can do with some wallets on your own. You'd have to create 3 separate hardware keys and then use 2 of 3, assuming you go with 2 of 3, which I would recommend. I wouldn't go with 9 of 10 or 7 of 8 or whatever. That just gets a little too complicated for the amount of additional benefit that you get. 2 of 3 is probably fine. But the problem with that is it's all on you. So I like collaborative custody where you're using a vault and the vendor has one of the keys and you have 2, so you can move it at any time when you want. You just have to keep your 2 keys in separate physical locations and then bring them together when it's time to move your coins, which should be relatively rare. You don't need your keys to deposit coins into the vault. You just need them to move them out or to consolidate UTXOs. So I would recommend that setup personally. If you have a lot of Bitcoin, then there are other options like multi-institutional, where you don't have any of the keys. 3 different institutions hold the 3 keys, and then you have to coordinate with the 2 of them to move the coins, which again, now you've got some counterparty risk, so you have to make sure that you trust that setup and that at least 2 of those 3 custodians don't go out of business. That's the issue. And the one thing I like about, for example, with Unchained is they have a open source software protocol that you can basically use to access your vault, even if they went out of business. So that, to me, that type of resilience is important. So anyway, just some things to think about before you launch into this particular area of custody. And finally, wanted to highlight this week's post in the Bitcoin Fortress Substack. It's entitled Exploring Keet, a New Era in Uncensorable Communication. So did a little digging into that and did a little write-up on it, so you might want to check that out. Link in the show notes. And finally, wanted to give a shout out to the top boosts on Fountain last week. Number 1 is at God's Death with 536 sats. Thank you, sir. And at M Techer with 500 sats. Thank you also for your support. And with that, I will thank you all for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can follow my Substack at bitcoinfortress.substack.com. And you can follow me on Nostr. I put my NPub in the show notes. So check me out there. And with that, I will talk to y'all next week. Bye-bye.